Hello and welcome to Commodity Champions. I'm Manisha Gupta. And the commodity market saw a host of notifications from the Finance Ministry last week. The big one being the 20% hike in import duty of crude and edible oils. The move may lift retail prices of edible oils, increase the prices of food items in eateries and dampen demand. It could also subsequently reduce overseas purchases of palm oil, soya oil and sunflower oil. However, it comes as a relief to Indian farmers as it could prevent imported oil from undercutting domestic prices. I was at the Globoil India conference, which focused on navigating a future for edible oil in the terms of innovation and sustainability. On the sidelines of the event, I caught up with various industry veterans to gauge the impact of the import duty hike and, of course, the Indian demand and consumption numbers. I spoke to Dorab Mistry, Director of Godrej International, Sudhakar, Desai, CEO at Emami Agrotech, and Somnath, Chatterjee, Head of Procurement and Logistics at ITC's Food Division. Let's listen in.
Many congratulations to the Government of India for finally agreeing to raise the duty and thereby doing something, giving confidence to the soybean farmers. And I tell you, the collateral benefit of this will be that if the soya farmers achieve better than MSP, it will give confidence to the mustard farmers to plant more mustard. So in fact, you are going to get two results for the price of one, literally. So that's a very good move. In my opinion, the consumer will have to bear with slightly higher prices, but it is a burden worth sharing. Agriculture is very important, and we were too much import dependent. And for that reason, I think what the government has done is quite correct. Looking ahead, we were expecting that out of the 22% higher duty, some of it would be absorbed by the producing countries because their markets would come down, and half or more would be absorbed by India. But to our surprise, the market is so strong, the sentiment, particularly in the palm market, is so strong and so solid, and the players are so well funded. Because remember, the palm players are some of the biggest players. They are vertically integrated from plantation to refinery to oleochemicals. So they are not short of a bob or two, and they can hold their stocks. There is no compulsion to sell. So they have managed to hold on to the prices, and when they saw that prices were not falling on the day after the markets opened, then the speculators jumped in, the futures traders jumped in, and they have been taking the market higher. So unfortunately, the Indian consumer is going to bear the full effect of the 18,000 rupees by which the duty has gone up, and maybe even a bit more. And for that reason, I feel that at some stage, maybe not now, but after Diwali, Indian consumption will shrink. India is the classic price market. I mean, Indian market, if you take tier 1, 2 and 3, tier 2 and 3 are definitely price sensitive. And this price rise is too high. So if Indian consumption declines, Indian imports decline, and the peak production season continues, peak production is September, October, November. So stocks will build up in Malaysia, Indonesia, and that could lead to a correction in the market. I am hopeful that that will happen.
So when it comes to palm oil production within India, what kind of numbers are you working with in next 5 years?
Well, the numbers are very optimistic, because there is a lot of planting taking place in the northeast. If this planting was taking place in Andhra and Telangana, I would almost guarantee that the numbers would be achieved, and India would be producing 2.5 million tons of palm oil by, say, 2032. But in the northeast, it's a big question mark as to what the productivity is going to be. The jury is out. And you know, palm is a long gestation crop. You don't come to know the result for 5-6 years. So I think we have to wait and see. But 10 out of 10 to the government for trying, setting up the mission, investing the money, and the private sector also putting its heart and soul into it, for sure. I am more optimistic on mustard, because we have actually shown and demonstrated that in the last 5 years, our production of mustard seed has gone up by whatever figures you take, 3 million tons, 5 million tons, and it's a quantum leap, up by almost 30%. And the scope for switching from wheat to mustard, now the Bureau of Agricultural Prices has confirmed that the profitability of mustard and wheat is roughly the same. So there is no reason for the intelligent farmers of Punjab, Haryana, Uttar Pradesh to switch. So if they do, then I think the scope for mustard, and not just sarso as we call it, but 00 rapeseed oil, which is a much blander form of rapeseed oil, but a higher oil content, if that can be introduced, and that can compete with soybean oil in the local market.
No, the objective of the duty increase is to cause a little bit of increase in prices to start with, because if it doesn't take any, if the international market takes the entire absorption and the seed prices remain below MSP, then the objective would not be fulfilled, right? So the objective being that the soybean prices and the Kharif oilseed crop prices should go up, that will be fulfilled. Yes, it does mean about 10-12% or 13% of inflation in the oilseed sector, but so be it, because it's for the good cause of farmers. As far as from industry point of view, I think we already explained to the government that probably a part of this would have been kept for increasing the differential between crude and refined, which is our long-standing demand. And the government also knows that this is a very long-standing demand. Why are we making this demand? What is the logic of it? We found that under the FTAs, while Indonesia or Malaysia, they can reduce the export taxes on the finished goods, whereas India is bound to keep it as 8.25. This has happened consequent of earlier trade agreements which are under negotiation. Meanwhile, with a solution approach, what at least from IVPA, what we have said was two, three things to summarize. One is that the duty should be more dynamically aligned with the world markets in order to not to have or give these shocks to the world markets. Number one is that as the global prices volatile, you know what the MSP is, what the retail prices that you want to keep in a month. Like we would have said that in the month of April, probably 10% would have been imposed. That would have taken care of the difference in MSP and of the mustard. And by now, soybean prices also would have absorbed some of it instead of big changes. So we were recommending a dynamic duty slab system. Second thing that has happened due to sudden increase is that these FTAs have got kicked in. So today Nepal has got nearly Bangladesh have got 25-30% of an advantage compared to the Indian refining industry. I can already see that there will be some cheaper influx. It will affect both ways. The FTA countries can pay a better price from the origins than Indian refining industry, can also sell cheaper into India. So this will affect predominantly the entire North and India. So we have said that, what is the solution? So we have said that in the crude oils, there is something called a AIDC that has been imposed. But on refined oil, there is no AIDC. So our request was, one of the solutions was that you can impose AIDC on refined oil also, and that would attract probably less than a little bit the impact from Nepal, Bangladesh influx of goods. And hopefully the related sector compared to soybean, the meal and poultry and aqua would also absorb some of this. We just heard the food sector also talking in the event, in the conference here, about how the food inflation, the related issues are also going up because oil is the main ingredient into
various sectors.
Yeah.
Really.
So the word is going ahead. The word is about balancing multi-sectoral interests, at the same time keeping the farmers in the center of the central focus for the policy to make it happen. So a tough job, but will be done.
Seems to be getting somewhere, sure. As Emami Agrotech as well, how would you look at, or how are you approaching the festival season? We do understand, as you said, the demand isn't as great as you anticipated. How are you looking at various products doing, and what is your outlook for the festival season as a company?
No, normally in this season, we also very big in West Bengal, where Durga Puja is very big festival, and then followed by Diwali everywhere. So normally we have seen that there is a 10% increase in the consumption around this time. So we are geared up supply chain wise in order to meet the demand in terms of brands. Our continued efforts will remain on creating niche and differentiated health oriented brands by our brand Healthy and Tasty. And then we also have an economic popular brand called Best Choice. So we continue to sell brands. We are also diversifying a little bit into products like soya nuggets and spices. And we are the largest producer of biodiesel in India because as a consequence of being reasonably prominent in palm oil imports, we can best utilize the byproducts by way of value adding. So we've been expanding a little bit on the biodiesel.
It must be a difficult time with a barrage of notifications coming in a matter of a weekend. Has the dust settled now?
Well, ma'am, it's settling down. So there was oil, there was onion, there was rice.
Wheat, and yes.
Wheat, of course. The ramifications of each have to be analyzed and shared with the larger management. So yeah, it's been a busy week. And we are still struggling to get our head around it. In the meanwhile, everyone had expected that with the increase in import duty of oil, the base market in Malaysia is going to correct, and maybe the entire impact will not get passed on to users and consumers. Unfortunately, the tailwind for the basic commodity is so strong that since then I think prices have only risen over the last 3 sessions. Today, as we speak, the market's up triple digits in ringgit terms. So yeah, trying times.
It is, it is. So going forward, especially when it's a festival season and you guys as companies are dealing with all of these duty changes, does it at all impact on what will be shipped out to shelves ahead of the festivals?
Well, again, because this is an oil conference, speaking on the theme, I think the government of India has reached out to oil refiners and kind of urged them that they should hold on to passing on the duty immediately to consumers and bulk users. And I think in some ways it will take about 45 days for the entire supply chain to get impacted. But there are material in the pipeline. For bulk users like us, I think several of the leading refiners have cooperated and they have said that okay, they've been reasonable with us. There is some oil that they have in their tanks which is pre-duty, which they are continuing to give. Of course, this will only be a very tactical, short-term kind of a thing. So eventually prices will go up and eventually all FMCG companies will have to rethink what is their strategy. So there is a double whammy. Demand has not been very buoyant. It's been less than what we had anticipated, let's put it that way. And when now faced with commodity inflation in most of the key commodities, you can take maida, which was about 26, 27 rupees a kilo, pan India last year this time is today about 34, 35. So that's a big hike. Oil we all know about. Sugar's been largely benign but still bullish. Then there are other things which go into our commodities like dry fruits, for instance, very, very bullish. You know, so stuff like cashew bits, which we were buying last year at 280, today across 500. So yeah, inflation is all around, and we at some point will have to bite the bullet and look at passing it on, if not fully, but partially.
How are you looking at a longer term view when it comes to essential commodities with various, whether it's about weather vagaries and environment and government policies, global cues as well?
So ma'am, yes, that is what worries me, worries us, and ITC as a responsible corporate has been taking climate change and weather very, very seriously. We have commissioned certain studies to look at what will be the water stress areas around India and what can be done to mitigate that problem. It's not only our problem, it's actually the nation's problem. And if we have to survive along with the nation, we have to try and find a solve for it. So that is one thing. Of course, geopolitics does bother us. But then again, it is more tactical, it's more short-lived. You know, the Fed reducing interest rates may push up or push down commodities for a while, but structurally, we are going to be having 1.5 billion mouths to feed very short order. And we need to gear up for that. We need to be climate resilient is the one message that I'd like to share.
All right, those are all the corporates from Godrej to ITC to Emami Agrotech telling us that the prices of many food articles are going higher from here, whether it's about edible oil or it's about spices, sugar, maida, cashews, dry fruits, that is. And going forward, they also suggested that the kind of demand that they were expecting during this festival season isn't so great until now, at least. Well, with that, we are heading into a short break, but don't go anywhere. We get you more conversations from the conference when we return. Welcome back. I also caught up with Indonesian Palm Oil Association's chairman, Eddy Martono, and Oil World CEO Thomas Mielke on the sidelines of Globoil India. Martono believes that India's duty hike on edible oil could hurt prices in Indonesia, while Mielke is optimistic about India's edible oil demand going forward.
I think it's too high because import duty increases of 25%. But just not for palm oil, just for another vegetable oil too. So I think, depend on the consumer in India and in the industry. If they still need a palm oil product, I think they still buy palm oil from Indonesia.
Indonesia has increased its levy today, even if it's by $27. What does it really imply?
Indonesia will be a decrease of levy. So I think to make, compete with another vegetable oil, because you know that in 2024 that palm oil is more expensive than another vegetable oil like soy oil and sunflower oil. So Indonesia will be a decrease of the palm oil levy.
What's your sense on the kind of production that Indonesia will see going forward when it comes to palm? And what is the internal domestic demand for palm? In
2024, I think you know that the Indonesian palm oil export is decreased. So in 2024, the demand is weak than 2023. So because of the, I think palm oil is more expensive than another oils.
Going forward from here, how do you see India as an importing country, as a trade partner with Indonesia for palm?
I think India is a very important market for palm oil industry, Indonesian palm oil industry. Why? Because India is the second largest importer palm oil industry from Indonesia. So I think we have to keep collaboration with India. So India is very important for Indonesia.
What also is your sense about all of this deforestation issues on one side and the fact that there is not so much of palm production growth expected going forward?
Do you know that Indonesian until now from 2011 that there were policy from the government is moratorium, and in 2019 there are presidential instruction number 5 2019 that totally stop. We cannot expand. So I think deforestation is decreased in Indonesia. It's more, I think, it's around 82% decrease deforestation in Indonesia.
India actually is one of the big stars worldwide when it comes to world demand. The biggest growth in food demand is currently happening in India. Economic growth is good, very good. Population is growing, middle class is growing at a rapid pace. Demand per capita is still relatively low, so there's a lot of pent-up demand, a lot of new demand developing in the edible oils, and this is being reflected in also higher imports. Yes.
And when you look at edible oils, the other segment within that is biofuels. How are you looking at that impacting the supplies available as food?
That's a very difficult question when it comes to consumption of food items, consumption of edible oils for biofuel, because there is a competition between food demand from the consumer, not only in India but worldwide, and feedstock demand from the biofuel industry. And this is not only biodiesel, it's also aviation fuel, it's marine oils. So there is an additional demand which has to be satisfied, which is getting difficult in the current season. It's going to get difficult particularly in 2025, because the global market is facing a shortage in sunflower, a shortage in rapeseed, and uncertain supplies for palm oil. We expect, in our global analysis, we expect a recovery in palm oil production next year, while this year world palm oil production only stagnated and world exports of palm oil declined sharply, which this year could be compensated by higher exports of sun oil and rapeseed oil and soybean oil. But sun oil and rapeseed oil production and exports will be declining. So the big question mark is, to what extent can soybean oil and palm oil production and exports increase? Now, the world is in a situation of surplus supplies of soybeans. We have some problems in Brazil at the moment because it's dry, plantings are delayed, but it's still time to improve. So it looks like that also South America is going to have another very good crop next year. World supplies of soybeans are ample, but soybeans have only a small oil content of 18% and a big protein share of 79, 80%. So the global market cannot satisfy, cannot produce sufficient soybean oil without creating a surplus situation in meal. And this is going to become a big problem also for India. India is supporting soybean production with a relatively high minimum support price and protecting the industry with a higher import tax for oil. But India is dependent on exports of soybean meal. And it will be very, very difficult for the crushers to compete in the global export market with the South American meal and US soybean meal exporters. So it very much looks like that the soybean crush in India is going to decline, that the soybean crush is mainly limited by the domestic meal demand, which is only 6.2, 6.3 million tons, but that the export market for soybean meal will be declining. This will limit the soybean crush. This will probably most likely result in a buildup of soybean stocks in India.
All right, that really is a view coming in from the global experts as well, that going forward, things do not look so simple and it's quite uncertain, especially once you get into 2025. That is where you could be looking at shortage in case of some edible oils and higher prices and uncertain supply of palm oil. So while 2024 is about policies, 2025 could really be about supplies going forward, and that would perhaps keep the prices higher. But with that, that's all the time that we have on this edition of Commodity Champions. News continues on CNBC-TV18, so do stay tuned.